Energy production and consumption around the world is undergoing some major changes. I'm primarily speaking about oil and gas production and consumption. Now, some of these changes are due to new technology coming online and the effect that it's having on labor and prices. Some of these changes are due to the war in Ukraine and various sanctions and changes in trade. And then there are also the market forces that are occurring with changes in demand going on around the world. The areas around the world where we're seeing the biggest changes are in the United States, in Europe, in Russia, in India, and in China. Now there's winners and losers in this. The United States is a big winner. India is a big winner. Russia's doing fairly well and could be considered a winner. China's demand is decreasing and Europe is doing absolutely terrible. To start off, the United States is producing 13.5 million barrels of oil a day. This is an all-time historic record, and it's up 55% since 2014. Now, another interesting thing about this is the United States has managed to increase this production 55% while reducing the rig count. In 2014, there were 1,900 rigs, and today there are only 586 rigs. This speaks to the amazing gains in efficiency. Now, the other thing is the United States is going to increase oil production, expected to increase it to 13.6 million barrels a day this year. So a lot of the things that have been going on with U.S. oil production is an increase in efficiency. And one of the big headlines recently showing some of that efficiency increase is Chevron planning to lay off 15 to 20% of its total global workforce. And that's expected to save them about $2 to $3 billion in costs leading up to 2026. Now, Chevron did lose money in the past quarter, but this is expected to bring them back to profitability. The other thing that's happened since the new administration has come in is a lot more energy-friendly policies. One of the first things that Donald Trump did was approve an LNG export permit as soon as he got into office. The other thing that Trump did was reopen 600 million acres of offshore water for oil and gas development, and that reverses the Biden administration's restrictions. The big loser in this over the last couple of years has been Europe and primarily Germany, and a lot of that has to do with the destruction of the Nord Stream pipeline that gave Germany access to cheap and efficient natural gas for producing chemical feedstocks and for use as power production. So one of the things that's happened since that destruction of the pipeline gas is Germany and the rest of Europe have had to import a lot more LNG. The LNG, liquid natural gas, costs about 40% more than the pipeline gas. This has caused a lot of closures of factories and chemical plants around Germany, but also around the rest of Europe. Hard-hit industries include steel, aluminum, fertilizer, chemicals, electricity production, and automotive manufacturing. In fact, since 2016, Germany's automotive manufacturing has decreased 28%. Another thing that's happened in Germany since 2019 is union membership is down 14%. So Europe as a whole is dealing with reduced demand, reduced production. Germany's been on and off in a recession for the past 2 years, essentially. Europe's energy woes are due in large part to the war in Ukraine, which brings us to Russia. Now, due to the sanctions by the United States and the European Union on Russian energy products, oil and gas, that's affected Europe in major ways with the pipeline gas. So Russia has had to pivot towards the east, pivot towards China, India, and the BRICS countries. So Russia is also exporting oil and refined products to the BRICS countries and to the East as a whole. In fact, due to the sanctions on Russian crude, Russia's been refining more product, so it's been increasing its value add. It just goes to show that sanctions essentially just create new markets. Now, having a look at China, China's a massive importer of both oil and gas. Over the past few years, China's had massive increases in the amount of gas from Russia it's been importing, as well as oil from a variety of sources around the world. Now, due to China's slowdown in construction, that growth has tapered off in a major way. The other thing that's been having an effect on China's growth is new energy vehicles, as they call them. These are electric vehicles. And new energy vehicles in China were 38.6% of sales in the first 9 months of 2024. So 38.6% of all vehicles sold in China are now electric, or electric plug-in, hybrid, battery, etc. That's up from 31.6% in 2023. So a massive increase in electric and battery vehicles in China. Finally, that brings us to the other big winner in global energy, and that big winner is India. India now represents the largest growth market in oil consumption in the world at 25% of the total global growth in oil consumption. Now, India's total consumption in oil is only about a third of China's at 5.3 million barrels per day. China is 16.4 million barrels per day. However, India is the third largest oil consumer in the world. So what's India doing with that increased consumption? Well, one of the things they're doing is increasing their refining capacity. And refining capacity in India is expected to grow by 20% in the next 3 years. So there should be a 20% increase in India's refining capacity by 2028. The other thing that India is doing is exporting a lot of that refined product back to Europe, whereas they used to get it directly from Russia at a lower cost. So India is profiting this way as well. India is exporting $70 billion worth of petroleum products a year now. Of that, they're importing 38.9 billion in crude from Russia and 23.4 billion in crude from Iraq. So India is doing very well with the refining and processing and re-exporting of value-added products around the world. So to sum up, these are the big changes that we see in the energy markets around the world. We have some winners, such as the United States, with more production than ever before and low energy prices. The other winner we also see is India, which is becoming a much larger player in global energy markets overall. India is now the greatest source of growth for energy imports in the world, and a lot of that energy that is being imported into India is being re-exported as value-added products. China's continuing to grow, although China's much slower than it was before. The growth is much slower. It's still the second largest energy market in the world. And Russia has essentially pivoted away from Europe towards the BRICS, towards India and China primarily. So it's managing to maintain its space as a dominant oil and gas producer in the world. The real loser in all of this is Europe, and Europe's slice of the pie is shrinking. Overall, Europe is producing less value-added products. It has much higher energy prices, and this is affecting Europe's industrial production as a whole, and Europe is becoming a less important market for energy as a whole.